Wake up, goddammit. Welcome to MarketCast with Unk and Market Monk. Morning, P. How was your week?
It was great. I mean, I early on with the crypto stuff, the MSTR on Monday, Tuesday, you kind of have something like that happen, and you just basically spend the rest of the week trying not to mess it up. You had a big win, so you just sort of scale back, and um, I just hit a few things after that. Was really interested in some of those earnings moves, and read a lot of reports this week. So just win early and study. That's what I like to do. So that's what I went for this week.
Yeah, we kind of were already on crypto, so that really helped out on this side. I was already playing some names with you and kind of were on the bigger guys last week. So when that came in, it was pretty simple to play those. Um, I've been really good with it. I hate to say it, but when the volume's low, some stuff stands out, and they're usually crappy pennies. But I've been pretty good with
Yeah,
lately.
yeah.
Been pretty good with those lately. So I got another one of them this week. Um, and then kind of like Wednesday, I was looking for it for the volume to kind of stop, and did. So the end of the week, I was back to really not trading towards Thursday, Friday. Just didn't really look like an environment that I wanted to put my money in. Outside of that, um, the penny scalp, I pretty much didn't even really see much activity. So another light week, and I'm sure we'll cover a lot about that here going into this. But just yeah, it's a lot of not chop, but a lot of just low volume consolidation moves. I mean, it's like watching paint dry, as I always say, in a lot of these charts.
Yeah, and you have, I mean, even the strong stuff like Microsoft had a really good report, but still, I mean, they just pull them. It just gets dragged back with with everything else. Amazon popped on Friday. We're going to see if that will hold up. Obviously that Google collapse, but I mean, the biggest story for me right now is banks going below
Yeah.
that SIVB collapse number. And the big ones like C and MS and BAC and all them. And I just I just don't think you can, with the dollar going, looking strong, and then yields being so wacky right now. I just don't think you can have sustained upside moves, and that's this pop and fade thing. It's kind of worsening. It's been there for a while, but the fade part of it is taking another leg down in stuff I follow.
Yeah, I to be honest with you, I mean, like you said, we're a little bit ahead here, but last week I said a couple lights down the street before we see these big downside numbers overall, and I was kind of looking and wondering where it was all coming from, and it's definitely a question I had for you. It was like where's everything coming from? But you start mentioning things like banks and stuff like that, and it's just the regular companies that are looking like they're taking a hit. Maybe not the your A plus growth ones are not getting pulled down a ton yet as far, but they're definitely
Yeah,
getting a little bit of that. I hate using Tesla because it's the one I know, but like you said, Google, like it had pretty good pullback, but nothing crazy. But this bank, I mean, it's below. I mean, we're year to date low. We're way below October low. We're any low you could have picked out, we're below.
yeah, right, exactly. And so like one that I follow that I like, it's because it's kind of quiet and it's set up, is Adobe.
Okay.
And so, Adobe's had some great moves. It's pulling back, but it's still above $500. It's still well
Yeah.
above my
Oh yeah.
475 line. So it's like it's at that point where I think it makes a decision if it's going to go revisit those lower levels. Google on this drop could get bought right back up and be over 130. Before you know it, I just that's where like chasing puts on the tech stuff is really a bad idea. But until Bank of America gets a little more stable, gets over $28 or something, and stocks like that, it's hard for me to see a sustained move. Whether it's the technical definition of a bull market or now it's the technical definition of a correction. Yeah, those labels are always a little late to me.
Hmm.
But I think we're definitely kind of at a decision point, and you're just not going to get a sustained move up for 5 to 7 days in a row
Oh God, no.
with things like they are right now, particularly the dollar and the 10 year. If you day trade, you got to have those up. I mean, or just follow our room and Goose will post them. But with the dollars taking off, you need to start set a stop, think about getting out, especially those option trades.
Yeah, no, that's very, very interesting that you say that because the overall move, it like the bear market thing. The overall move isn't really like time based. It's not like you enter a bear market and it takes 3 months. Um,
Yeah.
sorry, if you were gonna say when we started talking bearish, it was August 1st, um, and
Yep.
I mean that was kind of the start of it, and then it was like a wait and see to the first Fed meeting, which that's another thing this week. We get the rate decision this week. Um, so this is the first time in a while we haven't ran up into that. But the whole point of that is like we've started the bear market, but since then, it was wait and see. What 9:15 I said, and then right when we got it right around 9:15, it was all right. The bottom's probably going to be from now to January. So we went from like bearish summer. Sorry, that was long winded. We went from bearish summer, which
Yeah.
is just a couple months, to all right. We're going to have like a quarter and a half of probably downside in most
Yeah.
things. So I mean that's and that could extend again. Like, but that is just kind of it's not time based from the start. It's not like oh we got a bear market, so everything just go down to one level and it should take a month and we'll be out of it. Um, the time is something you can't predict on it. It's learning how to play in that environment. I said it to a Twitter trader last week. You know, I feel for the guy a little bit because he's getting his ass kicked. You can see it.
Yeah.
Shout out to Groupon. But what's
Right.
gonna make you as a trader is either going back to work in this environment or learning how to trade consolidation. And the Adobe chart, that's the word that just like screams in my head when you mention that chart. It's in great shape.
Yeah.
It's just consolidating. Um, it's exactly where your head should be is in something like that as opposed to those banks trying to catch bottom down there. You really just got to wait for that trend to change, and pick a level of support. Like B of A, just off the top of their head. Like, man, if 25 doesn't hold, we're going to be hoping 20 does, and we got to watch that build, right? It's just kind of a psychological battle at that point in time. Um, sorry, that was a rant.
Oh, yeah, yeah. Well, exactly, because there isn't much history down there at those levels, and so that's where a lot of things become, kind of option driven to me. And then as far as you see a lot of stuff going down. So the thing is, well, I'm just going to change to puts now. I'm going to short the market. You just have to be careful about what you pick. You mentioned Groupon. I think of things like Piton or like all this
Yeah, yeah.
Zoom, all this stuff that's like so beat down, and it's like can I squeeze a few more dollars out of this? Can I whether it's like 10%, 20%, whatever. Maybe you can, but to me, the best shorts in this environment are kind of like the strongest companies that are seeing pullbacks back to where I've seen them. John Deere rejected at 380. It's 361 now. Very easily could go back to 350. I see some 340 popping up, and it's a stock. If you short that, you don't need some massive move down to do well. It's 1%, and those options will do great. And you got time to get out if the trade goes against you. But if you're trying to short these, the heavily shorted shitcos because you think they're going to zero, and you want to puff your chest out and be the person who takes them down. That just doesn't work that well. I mean, ask anyone who did that to Carvana at $7. How did that go? And there's to me there's a handful of those kind of stocks in that category that could squeeze pretty hard in this environment, and so just not an appealing short to me. And we pick our spots for upside, and those usually do well.
Yeah, no, you want to. I mean, 3-to-1 ratio. You want a short strength, I'd assume. It's hard to find strength
Yeah,
in these
yeah,
markets, but I mean that's what you're talking about. You want to find something that's running really hot. If I was shorting P and brand new, not saying everyone's brand new, but
yeah,
I would legit look for something that's like all time high, no news. I'm the other way now. I don't want it to have news really or anything good.
yeah.
And then it's running into a psychological level, like that shit you find that runs from like 830 to 900 or 880. That's the one I'm
Yeah.
shorting. That's the plays I'm shorting because it's not. It's going to hit that
Yeah.
ceiling. It's not going to go to 1,000 unless it has share structure like Chipotle. But it's not going to 1,000 off the rip like that when you're already overextended. I forget the chart. I think it's is it that AVGO?
AVGO.
Yeah,
Yeah,
AVGO. Yeah,
yeah, that
that's
one.
where I don't even short. But if I was looking at some short charts, that's what I would look for. Is that kind of setup?
Yeah, I had 200% 3 days in a row on that, and it was just the same. It was just kind of the same thing, every time. It
Yeah,
would
yeah.
it kind of it get hot intraday, hit one of those, just like basically those round numbers that they concentrate on. They get out of all the calls, and there's just nothing to hold it up, and it just drops 10, 20 points. So yeah, that's been a really good one for me.
I mean, I
LLY is another one that, I mean, obviously, like, that went crazy on on that last earnings report, and then kind of up again. It's pulling back now, into ER. So I kind of I look at stuff like that as well.
yeah, I try to. I mean, obviously, I'm playing the upside, so it's a little different. But when I have like a penny that's, I mean, they'll do two things, right? They'll stair step up. You'll kind of build a level, pop, build a level, pop. Those are easier to play 100%. Like, I mean, they're harder to enter if you're cheap and you're not already in, but they're easier to play. It's the ones that kind of go sideways in like a playable range. Let's say a 7 to 15% range or a 40% range, right? They have a playable range because they're gonna tighten up on you, right? You're gonna want to play it 2 or 3 times, and they're gonna continuously tighten up. So let's just take a round number here. Let's say it's $1. Me and the dollar
Yeah,
stocks, and it runs to like $1.20, right? Well, what I'm instantly watching for, I get my 20%, maybe take 75 or take it all out. I'm trying to get back to that buck. I know I'm probably going to get 105s or 102s in a healthy environment, and then I'm making sure we get back through like 115 strong, right? Because if not, it's just going to tighten up on you. And I think a lot of people see that first move to 120, get excited, they get a good, and this is even with an option chart because it'll move the same way. You get real close
yeah.
to that first entry and you grab it, but you never make that first target that you seen when you were like, oh, I missed it, because the chart's just tightening up. And learning how to play that is key if you're going to survive this current time. On, on the
Yeah,
on the on the
absolutely.
option side, what I've seen, Pete, because I have looked at some charts, is it usually doesn't go straight sideways. It usually stair steps down because you're losing the time, I would assume.
Yeah, no, absolutely. And you see, when people post their daily P&L, and it's bad, like you get big spikes early, and then it just slowly bleeds out. And that tells you that the price is just consolidating, but the options, just you're getting killed on it as time goes by, and people panic and they just stare at it going down instead of just getting out. And one more quick example of an individual name that did what you're talking about. So SMCI, had a bad week, but on Friday, when people, I think, were probably looking for this to make some kind of big move, it was just boxed in between 240 and 245 all day. Whereas the rest of the week, you had these, this 5, 6, 7% range during the day, and then things just tightened up. Whether that happens because the volume is low, or there's some options they want to pin or something like that. That is the risk of entering something that's already made a big move, whichever direction it is. It's like thinking that you're going to go in that next day and either reverse it for some big gain or see some next leg down. I see it. I see it all the time. John Deere have a 2.5% day. The next day, 0.3%. And so that's where like you have to have the level in mind. Otherwise, you just let it go. Middle of the zone, find something else. And I see that over and over again.
I at least have the the daily levels in mind. I mean, if
Yeah,
they're not respected, it's how do I say this without like being really short sighted? So if they're not respected in the current market environment, it's probably not going to have a good day. It just isn't. If you're not holding your pre market levels off the rip, you're probably having a bad day. If you're
yeah,
not holding, it's just probably not making it its way back. It would have held it from the open. And why do I say that? Because that's where all the volume is right now. I mean, 8:30, it's gone nowadays. Um,
yeah,
it just really is. There might be one or two plays that stay active because of the news. Thank God for us. Um, but
yeah,
for the most part, if you don't stay inside your box, if you scribble outside the lines right now, it's just over for you. And it gets worse when volume gets worse. I don't want to say later in the week, but currently, you know what it is. I mean, we're 2 for 2 on that.
yeah.
I pointed that out last week, and it's just what it's gonna be. I think for a little while. That coupled with people are still selling. I mean, it's still that sell, right? If you have stuff that's hitting your year mark right now, and you're watching it leak out, um, you got to make a decision on some of it. You really do. Nvidia is a great example. I mean, we're going to talk about
Oh
that too.
yeah,
I know it's on your list, but I mean that 400
yeah.
level is gonna be, yeah. There's some talking to do on that 400 level because it's two different direct. It's a tale of two directions from there, in my opinion.
Oh, for sure. Yeah.
Um,
And the and so yeah, and again, I mean, option side, we mentioned we mentioned time, and I mean, one thing that I do in this environment is I add whatever I'm thinking of buying, and what I'm thinking of buying is like what I see them buy. I add 1 week and I go closer to the money, whichever, however much I want to go. And when I use that phrase, I'm playing close to the vest. That's kind of what I mean. I want to be able to weather some of the this chop that people talk about, um, this kind of consolidation, or if I'm looking for a quick move, the only real quick moves that have been reliable lately, it's a level below a put to test it, and lately the test fails. It just keeps going, and so you just keep that put, and then you get out, and there's no second half of the trade to be had. So I just let it go and go on to the next day. A lot of times it's like, okay, I'm gonna try it again. Here's another level down, and you just keep doing that. So I prefer to play the upside, but if you're in options, to me that's how you do both directions. You don't just get wrecked on one side, get frustrated, and switch to the other one. That's what you see the people on Twitter doing. That's just your emotions running things, and you don't want that.
yeah, as a non-option guy that listens to an option guy every week, um, really stood out that you said, how you're playing right now, close to the vest, week off of here, closer in the money type thing, where you were pretty adamant in the good market through the first half of the year, because I heard you say it repeatedly.
Mm-hmm.
Buy what the whales buy. Buy what the whales buy. Just buy what the whales
Yep.
buy. They're not going to lose money. Buy what the whales buy. So just that pivot in general from the market to market is very interesting to me.
Yeah, it is, and because they, that some of them are losing money. I mean, I think that's one part of it. Some of them I don't think particularly care that they're losing money. They're protecting positions they had, or moving things around, or tax harvesting, or all that shit that happens at the end of the year. But so yeah, I mean, I think that there's a lot of flow that can kind of trick you and trap you right now, and I think you have to be more careful in reading that. So I try to find the ones where it's like they're not likely to hide. There's no incentive to do any kind of goofy multi-leg stuff, those clean reads I talk about, those become really, really important right now. And to me, I mean, the biggest story, and I'll kind of wrap this up here, is that oil is definitely not doing what I expected
Yeah.
right now. And I haven't gotten just like killed in any oil positions. I closed them. I did well on Dino and a couple others, and I'm getting back into Oxy just because it's at some levels I know and and trust, and I have a plan for the if it goes down one more leg. But yeah, I mean like CVX and going down 10% in a week. I mean I didn't see that, and I'm not quite just rushing in to buy it. But only thing I can say about it that makes sense to me is that we have all this Middle East stuff. Oil gets all this attention from people who don't usually trade oil, so it was really easy to trap longs in that setup, and that to me is one of the things that happened.
Yeah, talk about rolling oil. I was one saying 100 coming out of the summer just because I've seen the conflict and I know our reserve is low and stuff like that. But yeah, for me, you taught me how to trade like the price properly there. So I look for the 90 92 level, and we just never really
Yeah.
got even going there. I mean, we really didn't. Which is interesting now that we have another war. I mean, we're actually moving ships now. Um, so that whole, for me, I don't know how it's not extremely high right now. To be honest with you, I feel for people like me because if it goes up again, my gas is going to be outrageous. Um, Actually,
Oh yeah.
it's
Yeah.
kind of gone down out of the summer. So yeah, no, totally wrong on the gas and oil side. Thank God for LNG, but I'm more curious, like you said, with this. I think it was was it them or Zom that bought Hess? Like, how was
It was
that? That's
Chevron. Yeah.
Oh, it's Chevron. How is that bad news? I mean, I just don't get that. Um, I don't really follow this one,
I
but God, that's a bad candle.
Yeah. I mean I don't. I guess taking on their like that this will cost them like taking on whatever. I'm not sure what Hess's financial situation was going into it. So a lot of times in these mergers, there is going to be someone who kind of gets the worst end of it, but it's usually pretty short term to me when that happens. I think long term, I think it is. I think it is good for them, and they're just you know a massive company that isn't going anywhere. Um, but yeah, I mean that was a hell of a drop this week from 167 to 144. That's a lot for them.
Well, yeah, and it being on Friday too, is it done? That's another question to be had at some other time. But they're a little different than the tech, but I think it's the same thing that you said with
Well, they did have earnings. They had earnings Friday morning,
yeah,
so
yeah, yeah,
that was yeah.
yeah. No, we gotta look into that one. It's the same thing though that you said with tech. Like they're gonna absorb assets. That's what the big guys do. They eat
Yeah.
the little fish. It's just these guys are little. I mean, the debt, the assets, liabilities. You know, the head's gonna have some very bad loose ends that you're unaware of if you don't follow the company, which I don't.
Yeah.
But so it's a little different tech environment. But for me, no, in the long run, how do they not win on that? So yeah, I'm interested in that. But kind of little off topic from the actual oil, but um, I think though that's what you look at in this environment. News that doesn't make sense, right?
Yeah, no, definitely. And I'll tell one thing that's a bright spot. We'll see if it continues, but copper had a big bounce. So I mentioned three. You don't want 350 to break down. It's 364 now, so up almost 2%. Friday, some news with China, I think, sent that. So that starts to take off again. That actually helps. It's the sector. It's the sector that helps tech that people don't realize is important. But that'll be something I'm watching this week too. Natural gas has been very healthy. That looking for that to continue. You could see natural gas at $5 in another 6 weeks or something like that. I think so. So we'll stay on those two.
Yeah, what I'm what I kind of watch, I mean, coffee, cheese, milk, eggs, and the metals, obviously. But I try to watch them all a little bit. Um, there's really not a lot of them are like getting relief. I don't know how else to say it. Especially if you look at
Yeah.
the year charts. But it's not really transitioning to us yet, which is kind of interesting. Um, like coffee's very
No.
coffee's been one. Like I like the charts, but man, I like the business model. I mean, you're paying $7 for a cup of milk. Um, so I like all that, but the commodities, I don't want to say they're detached, um, but they're not affecting day to day business. That's a better way to say it. Currently, it seems
Uh,
like demand's so low in some stuff that it's not affecting business like it should be. Are you seeing that, or is that just me?
oh, I am. Yeah, and actually, this is a little different, but so for gold to hit 2,000,
Yeah, good call. Good call.
and be like 5% from that, I guess, all time high.
Yeah,
And then this gold stocks are 30% from recent highs in most cases. Um, those those are lagging way behind. So then you say like, well, why is that? I'm not so certain as to why that the demand hasn't gone into those stocks, but I do think that has to resolve itself, and so you will start to see some of those gold stocks catch up. One of the reasons I was on it this week, but yes, I am definitely seeing that. Um, well, you see, I just mentioned copper. The
mm-hmm.
copper stocks didn't move up
No,
with that move
100%.
in
Trust
copper.
me, I watch it
So
because of you. Like,
yeah. So like it's it's like what it's interesting, and it's just a product of this environment right now. Whatever the market's tentative. The money's tentative to go into these stocks because a lot of times they do just follow. Oh, copper's going up. I'm gonna buy some FCX. I'm gonna buy some CCO. Aluminum's going to go up too. And you're just not seeing that in the same way. Um, and aluminum, I mentioned that it's above my line at 203. Um, you could see that move to 210. Normally, if aluminum's 210, AA would be
$30.
$36, $32. Yeah, I mean,
30
so like
bucks.
it's just not right now. So it's like, do I just go ahead and enter, thinking it's going to? I, your risk is kind of low, but I still would kind of have an exit plan. I wouldn't
Sure.
ride AA down to $20 just because
No.
you see aluminum doing well. Um, so yeah, it's they're tentative right now, and it's you see it across a lot of sectors.
Yeah, and I wonder if that's a good signal for, you know, the time thing we talked about earlier. I want to get your opinion. I mean, you can go do some research, bring it back to me next week, though, on the price of them feeder cattle, uh, because
Oh yeah,
I want to
yeah,
know how that or whichever one of them goddamn ones relates to the burger index.
yeah. No, that's a good idea. I'll make a note.
Maybe lean hogs too. I don't know.
Yeah, yeah.
Let's get into the big dog before we get out of here. Old Spy, man, did it fall off a little bit. Um, what did I want to say? Oh yeah, I said that a couple lights down the street would be that 210 211 number, whatever my volume profile was. I guess those two lights was Friday. Happened kind of
Yeah.
quick. Happened kind of quick. Like I said, I wasn't really watching charts the end of the week. So the worst 2 days, I mean, we were still 417, 418 when I checked SPY before Friday, final check, and I was like, damn, we fell off the map. But why, again, end of the week, and was there a reason for it that you've seen on your side?
I I mean, so on the option side, I would say that drove it is all this movement of from 420 1117 420p. There's a decent sized roll that I think happened to 1215 400p, which kind of just gives it some extra momentum down. Now, but in terms of why it's selling off, I don't have a great answer for that. Like I just it's a lot of anxiety maybe about the Fed, and we're sort of in this moment of where a rate pause or a pivot, like that whole dialogue has lost some of its kind of bullish optimism to
Sure.
me.
Yeah. Yeah.
That the actual some of the lagging effects of the bad stuff that's been circling around, is kind of catching up to things, and the market breadth that I talked about a few weeks ago is worsening. I mean, I think it's melodramatic when people say it's worse than it was in the dot-com bubble. That's true, but I don't necessarily think that means that we're in a dot-com bubble right now. But the way that your market leaders are kind of holding things up, and everything else getting worse, and then one by one they're picking those off. So with Google, Apple's been struggling. Um, Microsoft took off; they pulled it right back. We're going to see what happens with Amazon. And so, to me, with SPY going down, it's kind of a simple matter of the the math of what's in it. Oil's down, healthcare stagnated and it's pulling back now. And so you add that to some of the big tech coming down one at a time, and you're starting to hit some of these downside numbers in SPY. So I I don't want to overcomplicate it looking for causes, but I think that's just kind of the reality, and options definitely reflect what's happening in that respect.
Yeah. I pulled up the big dog here. I mean, I'm back to 18 on this chart here. Um, if you look at the 200 on the weekly, it kind of gives you an idea of the trend and projection in general. The only time it
Yeah,
really smashed below it was the COVID dip. Um, for me, you can't draw a trend line on this thing and it be downside unless you're August this year.
yeah,
I hate to
yeah.
say it, but you really can't draw a downward trend line. I don't care. Pick a spot. Pick a spot. Pick a spot for me. You can't really. It's still up. It's still sideways and up. This, if you pick this one, this is probably your best one for your argument. But then you're gonna follow the 200, or the
Yeah.
200 is gonna beat you. So that right now, just to me, is the simp. This it did it here. This is normal before the world changed. This is a world changing event. Um, this is just regular, and I think we have to kind of do this again. We were just overcooked up here at the four. This is 480. So I just what did I
Yeah.
just say about tightening charts? Right? Did I just not say something about tightening charts? Let's use that here. Um, so 480 come down here. The bottom was what 370, 350 even if you go doji, but really that's that 370 area. Um,
Yeah.
Now back up to 460. Probably gonna get 390. It's just what it's going to be. Maybe 380 even. I mean, because that's where the 200 is right now. It's another perfect test. And then we're probably only going to get this 430 level, right? And that might be,
Yeah.
to be honest, that might be April. That whole thing I just said might be from now until April. Could be now until summer. That time is hard to figure out. But like you just got to kind of understand the history and how far we've come. Before COVID, SPY was 330. I mean, if you told me in 19 you're going to get 25%, 30% on your money, is that math right, P? 50% on your money,
Sounds
shit,
close. Yeah.
50% on
Yeah.
your money, you're taking it.
Yeah.
If I told you you're getting 50% on your money, we're going to have a world pandemic, and
Right.
we might be going into World War III. You're taking it, so you need to like have that overall and see this as healthy, and that's why I started talking about it through the summer because I thought there's just no way we could. We're not going to 500, right? This is not going to. This ain't going to continue through the end of the year.
Yeah.
from here.
Yeah.
So we got to get a little pullback, and then that thesis has just grown. And if everything we've talked about, it's just continuation of the thesis. I mean, that's just where we are here. Um, so
Yeah, and as I was listening to you, this is kind of interesting. So I use this AI signals algo for TradingView, and
yeah,
it's not the be all end all, but there are some things about it that are interesting, and they correspond a little to what you're saying. So the we just had a weekly sell signal on SPY for the first time since February of 22, and at that time SPY was over four. It was like 450, and then it kind of bottomed out where you said, and it didn't give another buy signal, and this is where it was a little late, but it didn't give another buy signal till May of this year. And then that went on for a while. So my point in this is that these weekly sell signals, you look back on its history, it's not a 1 week thing. It tends to be 4 to 6 weeks
mm-hmm.
of downside, little chop up in here, up up whatever. And so what I'm looking for the downside from this is a smaller range here, that tightening up that you talked about, and I can definitely kind of see that taking shape. Like 350, no, I doubt it. Even 370, I think that'd be a little much. But like you said, that if we fall to 390 and show a little bounce from there, a little strength, I still feel pretty good about the market if that happens. And I think that's where people are going to overdo it and short the hole like I'm talking about and think we're just going to collapse. But I still think that that's perfectly reasonable for a correction, and then you move back up, and then again probably don't go as high next time. But yeah, that tightening, this AI signals thing, I can see it kind of clear as day what you're talking about there.
a lot of people don't. They're so short-sighted on the last low, and I mean, SPY's like the easiest chart on the planet for me to read in that regard because it's like a tanker, right? It doesn't make fast moves. It really doesn't. Um, but like this is their last low. It 380.65 is your last low, and it happened in March. I mean, that's it.
Yeah.
I mean, I don't care what this wasn't a low. It wasn't. This is consolidation. This wasn't a low. This was consolidation. This wasn't a low. This is pullback. This still isn't the low yet. I mean, like we're hoping we get one here at like 390. Well, I can't say this isn't the low yet because it's still live, but like you just have to let it pan out a little bit and then understand how far you've come and what should be healthy. I mean, if to be honest with you, if we held 410, 403, that would be such a great
Yeah.
higher low. That'd be such a great higher low, but people are going to panic for this month.
They are, and part of it, when these people are trading options and a 0.5% drop isn't utter disaster
Yeah.
that wipes out a fourth of their trading account, then they have a kind of skewed view of things, and that's really what SPY, like I use SPY as a tool. For them, it's a roulette wheel, so it's just a different perspective on it.
Yeah, I'm doing some weird. If I traded SPY, I'm doing some weird math equation like last six or seven weekly candles, percentage of red or green, and then divide that by the square root of the last 20 or 10 daily candles or some shit like that.
Yeah.
And
Yeah.
that's the only direction I'm playing because I'm not fighting trend. That's the point of that. All right, so let's pick some numbers here. We were pretty even last week. Um, we both didn't see we've seen the downside, but we just didn't see it last week. That's how I'm going to say that.
Yeah.
But man, we're
Yep.
right here at this 411. We got to fight. We got to fight. I don't think we go. I don't want to say it, but I'm going to say it. I'm going to go 403, P. 403.69 because we're fucked. And then let's go. Maybe just a little. Where were we pre-market? 412. 85. Do I have anything there? Do I have anything here? 14. I'm not picking. That's way too high. Yeah, I'll just go 412.85 pre-market high on Friday. Why not? That's what I got.
Nice.
I don't think it's over.
So,
Three day, 3 week rule, right?
yep. Um, all right. So I'm gonna go a little bit lower than you, just a smidge. 401.07, and my high 414.59. How close am I to you? Is that too close?
No, you're fine.
Or that's
I was thinking
okay.
you. I was thinking I didn't want to say it until you're done. I was saying you Bob Barker me one more time. We're gonna do this like we do the final three.
Yeah.
Go ahead. Go ahead. Talk those numbers for me.
So the upside's kind of limited, and but I do have some options in the 415 area, and I was just looking for it's the body of the Thursday daily candle,
Okay.
kind of hits right there. So, that kind of looked like a good spot to me. Matches up to a bit of what was happening back in May at a rejection. So, I kind of remember that too. And then as far as the downside goes, this is purely option driven, and just what I'm seeing happen. So the top three highest open interest chains are 11/17 400p, 12/15 400p, and then January 400p, just all kind of stacked up. And it's not just that they're the highest open interest; it's that their whales are adding to them at about 30K volume per day, and mostly ask side. And then the fact that 12/15 380p is kind of the next man up, heavily bid side. So I don't think we're going to 380 yet, unless that changes. And then the kind of the big mystery is there's nothing really at 390p to speak of. So I don't have much to read there. So I think we approach 400 and kind of make a decision, and that's what my read's all about. It's kind of getting right close, not paying out weekly puts at 400, but the stack for November, December, January, I think those contracts will do very well in the next week or so.
Yeah. Are you in the camp that we're gonna break 400? Just gonna happen?
Yeah,
Yeah, me
I
too.
do.
Um, I I pulled this on a big chart, but I lost my 200 here. But well, I got some signal guys in here too, and the last time we got the red right here, this touched the 200 here. I'll show you on a smaller one because I didn't fuck it up. Yeah, but this guy last time we got a red touched the 200. We haven't got a red since then, and we just got a red. Just got one like this week. So yeah, I think I'm with you. I think it takes a news event to break the 400 as well. It's gonna fight. I think we'll
Well,
be talking
you
about
know,
that next week.
it's hard for me to envision Apple having good earnings, but the question is how much the market cares about that, because sometimes it shrugs it off. So that's obviously that's a big one. But Apple has pulled back enough recently that I also think it can absorb that. I would love it if Apple would fall back to where we were, but I don't think we're going to see that again. That 129.67. That was my my line on Apple. But
What was yours?
I mean, yeah, Apple
I'm curious.
129.67.
2 cents off.
Oh wow.
Mm-hmm.
Yeah, mine. I made that a long time ago. It was based on some math with options.
Oh, I just grabbed a low.
Yeah.
Oh. Are you ready to get to work, P?
Yeah, yeah, let's do it.
All right.